The Bank of Ghana on Tuesday expressed its readiness to supervise mergers and acquisitions in the banking sector in the run-up to the December 2018 deadline for recapitalization of the country's banks. The announcement came in a session with chief executives in the banking industry.
It was an engagement between a central bank unwavering in its decision to increase the minimum capital requirement and chief executives of banks, some of whom wish the December 2018 deadline would be extended. Led by the second deputy governor of the central bank, Mrs. Elsie Awaji on one side and Mr. Alhassan Andani on the other, there was a general agreement that the country's banks needed recapitalization. One key challenge still remains, and that's the duration.
We're expecting all banks, including local banks, to meet the requirement by December 2018. And we expect that for banks that are not able to meet the requirements by themselves, they would take steps very quickly to start to merge with other banks which are similarly situated, so that by December 2018, they would have somehow met the requirement.
Clearly, I don't think this is an exercise that the government or Bank of Ghana is doing lightly. We should view it as part of the building block, or a significant building block, in ensuring that we have a robust economy. And I don't think that's the end of the road for shareholders anyway, because most of the shareholders can still find innovative ways to get to the 400 minimum capital.
Moving forward, the commercial banks want the central bank to check the poor credit culture of government, which in most cases affects the operations of the industry in a bad way.
Very large exposures that the financial sector makes available to government and government-related parties in the spirit of critical industry support tends to not get paid on time, and not just on time, severely delayed.
The Bank of Ghana, in its March 2018 report, described Ghana's banking sector as profitable, solvent and liquid. The total asset base of banks increased to 95.1 million Ghana cedis in February 2018, indicating an annual growth rate of 13.7%. Despite this position, the central bank still believes that there is the need to move the minimum capital requirement from 120 million Ghana cedis to 400 million Ghana cedis to achieve stability and guarantee the safety of depositors.